Hey, what's up, guys? I just want to do a quick recap of my trades over the week of Monday, the 6th of January. I took a week off over Christmas. I went on a little holiday. I wanted to come back and start the year fresh in 2025, which is what I did. That has returned our fourth winning week in a row. You can see the balances on the right here. This was a very swingy week. Started the year with 2,400, dipped to 2003, peaked 2008, and ended up back to pretty much our break-even balance for when we started out this endeavor. But yeah, like I say, the fourth winning week in a row here, so I'm really happy. And I learned some things along the way, so we're going to talk about the trades quickly. We started off on the Tuesday here with the pound dollar. Pretty standard trade. We got a very nice sell signal, but the next candle brought us straight back up into the stop loss. And then we had a little concurrent 3-win streak. That was really nice. We started with the Aussie dollar on the US dollar, and this was a really nice trade. Got the sell signal, got in a little bit earlier as well, a little bit more favorable. And this was really fun, just watching it go straight into the take profit for a 3.83 risk to reward, netting £187. Really happy with that one. And then these two sort of come as a pair, both on the Tuesday. We had the Aussie dollar yen, a big short, and a euro yen, big short. Show you these quickly. Lost where I am now. Here we go. Yeah, so right here on both of these sort of come as a pair because they were very similar setups. You can see this is the trade for the euro yen, this is the trade for the Aussie dollar yen that we're looking at here. And I took my profits a little bit early on this one. As you can see, it was very swingy. We come down into a 2 risk to reward here, back up to break even, and then we was 1 pip from hitting. This wouldn't have been take profit actually, but it's come right back down, back up to stop loss. This is a really swingy trade. And so the emotions got the better of me ultimately, and I took my profits early on both of these. These would have been targeting at 3.8 each, and I've taken the profits to 2.34 and 2.36. In the case of the Aussie dollar yen, this was technically a profitable result because the buy signal come right here before my take profit down here would have been hit. So I would have received this buy signal and gotten out for a 1 risk to reward ratio. However, this was the incorrect decision to make, even if it was financially the better decision to make in this specific scenario, because I've built my system around predetermining the take profit, and I can't be taking my profits early. That's going to completely flip the system on its head. And so, yeah, in this case, this was a better move to make. But as you can see on the euro yen, we did not get that buy signal, and my take profit would have been somewhere around here, which would have very easily come in. So a little bit disappointed in myself there. I need to stop letting the emotions get the better of me. I'm finding when I just get the straight losses like this, the bang negative 50s, I'm pretty desensitized to that now. I can sort of handle it, take it on the chin, don't think much about it. But yeah, my real problem and challenge I'm having to overcome is watching the profits dwindle. When you're up, 3 times your risk, and bang, you back up to break even, 3 times your risk, break even. As anyone knows, first time trading, it's difficult. So I just need to make sure that's not getting the better of me, because it definitely impacted my decisions here and lost me a little bit of money. But is what it is. There were the 3 trades on the trot. And then, yeah, we had a little shrew of losing streaks here, and I was introduced to the lovely mechanism known as slippage. I've done a lot of work on this system, developing it and making sure it's as accurate as possible in my back testing results. But this is one thing I didn't properly take into account for, was slippage. You can see here we got in a trade at 8 o'clock, and at 10 o'clock, at the end of the 9 o'clock candle, it opened a lot lower, and obviously the spreads are huge when the market reopens at 5 past 10. So we ended up losing nearly twice, well, not nearly twice, but maybe 1.8, 1.7 times the amount we was risking. This should have been a negative 56. So that was a big shock. And I've been working the last 2 weeks to go back over my last 2,000 trades, the last 4 years, and sort of take this into account. And it's not impacted results really significantly. So definitely somewhat, but this is still proving really profitable in my results. So it's okay. I just need to make sure I fully understand this and figure out how I can fully account for that in my back testing, which I've been doing. So that's all okay. And then, yeah, on the Thursday, Aussie dollar yen, we just had a standard trade, little loss here. Yeah, we got the buy signal and got stopped out a few hours later. And again, slippage on this pound dollar on the Friday, final trade of the week. This would have been a $52 risk. We ended up losing $108 I say dollars because that's just how I've written my back testing results, but it is all pounds, it's all sterling. Yeah, you can see here was where we lost this big 108. Our stop loss was here, but the market has crashed through the stop loss, and I've gotten filled way lower than where my stop loss actually was. And in twice the amount we was risking, losing twice the amount we was risking. So yeah, this is again something I've been working on to take into account, and it's had quite a significant impact in my results. I'll sort of show you what I've been working on. Let's have a look at 2024. Let me just find my sheet. I've got so many sheets at the moment. Sure, I've been working on. So I've got these sort of master spreadsheets here where I calculate all my trades, and then I get the AI to increase it to a 2% risk, and it will, every single trade that I input into the AI, it will work out the risk, the fee. This is just a flat fee, the spread. So this isn't including slippage. Yeah, the risk, the fee, and then it will work out whether it's won or lost. It'll look at my risk to reward ratio, work out how much it lost or won, work out the account after, then do it all over again. And so this way I can work out compound interest. I can look at what my results are at 1% fee, 2%, 3% fee, etc., etc. So yeah, I've basically got the sheet. I've worked out, looking at overnight positions when the market closes at 10, you're still holding, how much that's going to cost. So I've worked out my position size for each one, etc., and then crunch the numbers, and it's not too bad. Without the overnight charges taken into account, looking at 2024, it would have turned $2,500 supposedly into 19, and then with the overnight charges taken into account, the 19 is only 16.7 now. But obviously, you're still more than 5x in, 6x in, 7x in the money. So it's really good. So not too concerned about the slippage, but definitely something I need to bear in mind as a bit of a shock to the system. Losing that amount hasn't happened to me yet. But yeah, I'll keep on developing and moving forward, and hopefully we will be very profitable during the middle of this year. Yeah, okay, thanks for watching, guys. Catch you guys next week.